Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Well, marijuana's been legal in Canada now for a couple of weeks. What's happening with marijuana stocks?
Well, as we discussed on your show 2 weeks ago, we were concerned that insiders were taking a lot of profits ahead of legalization. And lo and behold, a couple of days after the marijuana stocks really fell out of bed, came back down to earth, however you want to describe them, and it really did become a sell-on fact kind of situation where a lot of people had bought in ahead of time, and cheered on, by the way, by a lot of, I would say, promoters on both sides of the border. So it'll be interesting to hear what some of these people are saying now. But look, there's going to be winners and losers in this space, and right now, what you're really looking at, I think, is a new phase for marijuana stocks where, the tide has kind of gone out here, and so not all the boats are gonna be able to keep paddling and moving on to the next destination. Some will be stranded, left on shore, and now investors, the hard work really begins now. There was a lot of conviction in the space that, there's great growth opportunities, and, there are. I mean, Mexico now is, probably going to legalize, recreational, use, but, that's good. But at some point, you've got to identify which listed companies are going to be able to capitalize on that with a game plan, a business plan, capital. So the opportunity is well recognized in the market. I think what is less recognized is which companies are going to win and which companies are going to be losers. There's going to be some little companies that do very well. There's going to be some big companies that do very poorly, and vice versa. So the hard work is really ahead now for investors in the space. What we're seeing is a little bit of insider buying. Our pharma indicator, which includes cannabis stocks and also non-cannabis pharmaceutical companies, but in Canada it's dominated by the marijuana companies. It's shot up here. It's over 100% now. There's more companies with key insider buying than selling. But until it gets over 150%, we're not there yet. And until we see peak insider buying, we won't have confidence that we've seen a bottom in the space. When I mean a bottom, a key support level. Now, if we were to see a peak in our indicator around these levels, I think it would indicate a rather weak support level. If there's a bigger correction in marijuana stocks, we would likely see more insider buying. We would have to watch and see, and maybe that would provide a bigger level of support. We'll have to see. But right now, the jury is still out in terms of whether we've seen a bottom here the last couple of days. Based on our indicators, I don't think so. But maybe in the next few days, the picture will become clearer, and maybe we will be heading higher. But if we head higher from here, I wouldn't expect the rally to be all that robust. And that goes for a lot of the overall market, by the way, not just marijuana stocks. So, we're seeing insider buying pick up across the board, even in the United States. However, we're still not at levels that are really exciting. They're getting encouraging, and certain sectors are leading the charge. Other sectors are being left behind. So there is, I think, an attempt here in the market to try and find new leadership, but We're not getting a screaming buy the dip type of signal from insiders either in the United States or in Canada. The response has been rather tepid across the board, with the odd exception, and there are very few exceptions, but there are some.
Would people be tempted to get into the marijuana space because we're hearing of shortages right now as legal pot rolls out in Canada?
Again, you have to look at the market structure, and there are shortages in some countries, for natural gas. They can't get enough natural gas. But in Canada, there's no shortage of natural gas, and some companies have to give it away. If you can't get your natural gas to market, you're not going to have any cash flow, and your company's value is going to go down. We'll do the same with marijuana. If you're growing marijuana and you've got massive indoor production at high cost, but the provincial regulators haven't got their act together and they can't get your product to market, well, that's close only counts in horseshoes, Jim, as we know, and that could be a negative cash flow event in that situation. So investors are really going to have to take a look at that situation closely on a province-by-province basis.
What do you think of BC's pot rollout so far, where they only had one government store ready to go in Kamloops, and the next opening for a private store will also be in Kamloops? Was this well organized?
Well, from an investing perspective, I think you just take it for what it is. It is what it is. It'll gradually open up. Just walking the streets of Vancouver, to be honest with you, I have not noticed any difference. I mean, we were supposed to, October 17th was supposed to be such a big societal day, but to be honest with you, I don't think much has changed. Maybe it's because the retail distribution networks are not in place yet, and they're still working it out. Time will tell. But interest rates are on the rise, Jim. That means the cost of time will tell has gone up. So when you had zero interest rates, when you had the Fed buying bonds, pushing down long interest rates, you had lots of money floating around. Investors could get their hands on money to wait things out. That luxury is slowly drying up. So investors in highly, speculative, and I would still call the marijuana space speculative because of the factors you just asked about that aren't clear. The cost of waiting and seeing is going up. So that's another headwind that the group has to deal with going forward here.
Are there concerns that the tax rate on it will be so high that people will just continue to go to the black market anyway?
I think this is all sort of experimental on the government's part, and I'm sure they've done a lot of research in trying to determine the best tax point. They're very good at that. Have they overshot? Time will tell. If anything, though, I think they've probably lowballed it a bit. I mean, I hear a little bit of a little concern out of the brewers that they're heavily taxed, and it'd be interesting to hear what they have to say on that question, whether they think marijuana is being overtaxed or not. They may have a unique perspective, let's just say that, on the tax rate. So this will be evolving, and one thing you can bet your dollar on, that if the government feels it can raise taxes on marijuana, they will.
Beverage companies. Pepsi says it won't get into the pot business right now. Coca-Cola is in exploratory talks with some marijuana companies. Is that the new wave of the future? Beverage companies and THC? Well,
I think, we're seeing some companies kick the tires. Other companies have actually, put their money down. Constellation Brands in the United States, took a big position in Canopy. We will have to see. The market is now coming their way. When I mean their way, I mean these companies that haven't made an investment yet. Marijuana company investments are getting cheaper, not more expensive. I would be surprised if you see any major players rush in. Doesn't mean there won't be. Doesn't mean I won't be surprised, Jim. I'm surprised all the time. But when the market's going your way, sometimes, the whole sort of fear of missing out risk becomes a lot less of a concern. And, you can sit around your boardroom and consider a lot more options. You don't feel as rushed into the whole process. So we will see how that plays out. We'll have to see in general just how sentiment evolves in the space. The beverage area was really a big one a few months ago. The international diversification was another one. At the end of the day, you've got to find companies that are focused and can execute and will be able to eventually show some positive cash flow. Not all companies are going to be able to do that. And that's where, stock picking is going to be key going forward in the marijuana space.
We'll have more with Ted Dixon right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Ted Dixon. Ted, did the action you expected happen in gold?
Yes and no. We expected gold would start to outperform most other parts of the market. And for example, since our last show, they have done very well against marijuana stocks and the broad market. But unfortunately, they've also gone down too a little bit here in the last few days. So it's been kind of a moral victory in the sense that, if you've been invested in gold or gold stocks, you probably haven't, felt nearly the amount of pain as some of these other areas of the market. That being said, of all the areas we look at in the market, in terms of insider sentiment, gold is one of the few strong, areas where we've seen insider sentiment really, behave the way we like to see it behave when there's bargains around and because then insiders are validating, yes, these stocks are cheap, whereas you can have cheap stocks in a sell-off and they're not cheap enough and they still have to get cheaper. We're saying basically in this area, based off of our signals, the gold market, the gold stock market, is pretty good opportunity, for investors. It's one of the few because for no other reason, Jim, that I really haven't participated in the last few years in the huge, massive asset inflation that we've seen drive areas such as technology and the U.S. market in general and Canadian housing. So will it be gold's time to shine? We think so in the near future. And there's a number of factors that, we've talked about driving that. U.S. deficits is one big one. I mean, the Treasury just came out last week with its funding projections for the next year, Jim, $1.3 trillion. I mean, the Congressional Budget Office is expecting an accounting deficit of just under $1 trillion, but the Treasury is actually going to be going out and raising, selling bonds worth $1.3 trillion, and I believe that's the most since about 2010, right after the Great Recession. And the quarterly funding is going to be a record just coming up in this quarter, over $83 billion, according to an analysis that I read on MarketWatch. So we're going to have a lot of bonds hitting the market, which means interest rates, aren't going very much lower in all likelihood, short of a major economic downturn crisis. Again, that's going to put pressure on a lot of the high-flying stocks that relied on cheap money to, push up massive multiples. So, we do have a sea change that's going on. We're in a period of transition. I think we're in an era of transition. The Fed has really pulled off a communications coup here so far. Certainly under Yellen they did it, where she said, well, we're going to get back to normal. Everything's going to run in the background, and it's not going to be a big deal. Well, then she left, and then we had one major market pullback in February, and the market picked itself up and hit a new high just a month or two ago, only to now hit into correction territory unequivocally. So the ability of the market to rebound from these setbacks is becoming tougher, and that's because, Jim, we're going through a period of transition. It's very big. We've got the Fed that's tightening liquidity conditions. However, we do not know how much they can tighten before putting the economy into reverse. And Janet Yellen, as a matter of fact, even said that this week, I believe, in a speech she gave. So, gold has a place as insurance for two reasons. One, if the Fed doesn't get ahead of things, inflation will likely beat on the upside. Secondly, if the Fed gets too ahead of things, then they're going to push the economy into recession, which will mean you're headed right back down to zero interest rates again, where gold should do well. So under what scenario does gold do lousy? Well, the Fed gets it perfect, gets it right. And, we have another 3 or 4 years of boom in the U.S. and, with low inflation and under that scenario, gold will have a hard time getting up on its feet. So really, it's an insurance policy, but also in terms of valuations, it seems to be pretty well placed. So it's got a couple things going for it on that front. It's one of the few areas that we really like based on insider signals. The other areas that we're watching closely are the financials. Canadian financial insider sentiment's improving, but the REITs are a big factor in that. Same in the U.S. We've got U.S. financials, so that's a positive. Again, the REITs are helping to drive that. So the jury is kind of still out on the financials, but we really need to see the financials do well. We need to see our indicators peak here to show peak insider buying. Then I think we have the basis for a good, solid recovery in the markets. I don't think we're there yet. We're close, but close doesn't mean stocks can't go back down. We need to see our indicator peak, particularly in the financials, I think, to have some confidence that we've got major support levels placed in the market. We're just not there yet in terms of our ability to signal that.
We'll have more with Ted Dixon right after the break.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, what do you see happening on the energy markets?
That is a great question, Jim. I've been looking at that today for a number of reasons. But then we had this news about Encana buying out a U.S. company, the company Newfield Exploration, in an all-stock deal, which is a real head-scratcher. So you've got some interesting things, though, going on in the energy area, where you've got some consolidation going on in the service area, where you've got a bit of a bidding war for Trinidad Drilling, a Canadian driller, or Canadian-based driller, where you've got Precision Drilling and Insane going after it. That sort of makes some sense. I can understand the business case for doing something like that. When you're in general, I don't want to get into the merits of those two bids, but in general, I can understand where there might be a case for taking over a competitor, either to get some market power or to be able to better service your existing customers. This deal with Encana, boy, it's a head scratcher. If you, Jim, were an Encana shareholder yesterday, you could have gone out and bought Newfield Exploration on your own. You could have bought shares in that and get the exposure to all their assets. You didn't need Encana management to do that for you. So Encana stock got whacked heavily today. And in general, the energy sector, insider sentiment is not behaving the way we would like to see it. We're not seeing a big jump in buying. And as a matter of fact, in Canada, insider sentiment, while at overall decent levels, considering there is value there, we're not seeing additional buying in this downturn, which is a little concerning. The U.S., not nearly as exciting in terms of signals from insiders, although just in the last few days, we've seen a little bit more of insider buying pick up in relation to these falling prices. But look, the energy sector, we would put it as really deep, contrarian, situation where you really got to do your homework on the stock side. It's just too risky right now with respect to what's going on in the market in general with shale oil, with what, whether that's sustainable, the type of economics that have been going on there with Iran, with what OPEC's doing. It's very risky, and we're not getting a clear signal from insiders for the industry as a group that now is the time to rush in. Instead we're getting a very cautious signal. I think there are, again, sort of like in the marijuana space, there are examples where you've got managements that are pulling rabbits out of the hat, and you find those gems. That's great, because then they've got good cash flow. They can return money to shareholders, give you a good dividend. You've really got to bet on the jockeys here at these companies, and look for companies that are really focused on delivering the goods as opposed to promising the goods. And I'm afraid with this Canada deal, it's more of a promising the goods than a delivering the goods.
Could we see a shortage of oil in the not too distant future because nobody was drilling when oil prices were way down?
I mean, it's possible. We're not oil market experts, but I think what we would look at is the valuations of these companies in relation to the current environment. And the problem is the risks are so high. Yes, there's that bullish scenario where there may not be enough oil, but there's also a bearish scenario where you've got a lot of production coming online from the Middle East, from the U.S., from Canada, that really is able to meet most of the demand out there. And if you have a slowing economy, that's going to clip some of the demand. You've also got a bearish case. So the jury's out. Insiders are telling us the jury's out, particularly in North America. You've got a lot of industry issues. Everyone in Canada, I think everyone listening to this show is well aware of the pipeline problems in Canada. But, they've got pipeline problems in the United States. So what does that mean, Jim? If you've got thousands of holes that are willing to be completed, which are in the United States, just sitting there waiting for pipeline capacity. There's a lot of pent-up supply in Canada. How does all that work into the market? If you can figure that out, you'll make a lot of money. And, I certainly haven't figured that out. And, we'll talk about it on the show. As soon as I have, I'll let you know.
Some feel that Western Canadian Select, which sells for $45-50 less than West Texas crude does, is going to last at low prices for at least another 9 to 12 months. Is that a big blow to Western Canada?
It's a blow right now, and you really got to look at which companies are able to stomach through that. And this is because where stock picking becomes so important. And I'm not recommending any of these stocks, but you've got a Suncor who's got a refinery. Well, if they can get cheap oil into their refinery, well, that's good for them. But then, I heard today that Canadian Natural Resources is cutting their production because, well, they've got a lot of heavy crude that they can't get good prices for. So it's not so good for Canadian Natural, and so you really got to go through the list and see who's positioned for it. There's a company in the Canadian Insider Index called Crescent Point Energy, which has been the subject of corporate governance concerns, I guess, by a number of investors. In any event, those kind of overshadowed a lot of what was going on with the company, but they came out with the results at the end of October. And lo and behold, they reminded everyone that, we don't have these pipeline problems like most of Western Canada because all our assets are away from the congested pipeline area. So, their stock went flying after their Q3 results. But, it's still down significantly over the last 3 months, and again, they're going to face the same general industry risks as everyone else. So the energy patch right now. I mean, it's always difficult. It's much more fun, when oil is trading at $100 a barrel and everyone's scrambling for every last drop of oil. But we don't appear to be in that environment. We've got oil coming off here. There was a lot of speculation heading into the Iran quotas, the the Iran nuclear deal being pulled off. The U.S. doesn't want anyone trading with Iran. So there was a lot of speculation ahead of that one. That's all coming off. I guess there was enough oil around to meet the demand initially. We'll have to see how that plays out. Very complicated situation now with the energy markets across the board. And, is Canada any worse positioned than anyone else? Well, we have the Western Canada Select problem. That'll eventually improve. Whether it improves enough is another story, but we must be near some sort of a low. Whether it's an ultimate low, we don't know. But we'll have to see. And on the natural gas side, we've got LNG Canada. Hopefully, will be built in the next few years. So the medium-term outlook for the Canadian energy patch is probably okay. And we see that again in our indicators are at decent levels for the medium term. But boy, in the short term, there's a lot of risk in the oil patches. And I mean oil patches. I mean in the U.S. and the Canadian and global in the global energy area across the board.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Find us on YouTube at Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.